Well, hello, everyone. This is Gabe Bodner, and I'm here today with Heidi Heineke, and she is with Robertson Ryan, an insurance agency here in town. Hello, Heidi. How are you?
Well, hello, Gabe. Thank you for having me on today.
You bet. My pleasure. Thanks for being here. And today we're going to talk all about homeowners insurance and ultimately do a deep dive into what homeowners insurance is, the different breakdowns, and why it's so important. But before we do that, if you just want to do a quick introduction of yourself, that would be fantastic.
Wonderful, Gabe. Thank you for that. My name is Heidi Heineke, and I am with Robertson Ryan Insurance. I'm an individual agent, so I carry a variety of insurance carriers that I work with, as well as work on a number of lines, including that personal lines, which could include your home and your auto umbrella, and then also I do work on the commercial side as well. But really, we're here today to talk about those homeowners insurance questions and what that looks like in our very changing world of homeowners insurance.
You got it. You got it. And this being here in Boulder County, Colorado, has become a hot topic over the last 2+ years, unfortunately, due to the Marshall Fire that we had at the end of 2022. Um, or 2021 rather. But with that being said, let's do jump into it, because again, a lot of people have been asking me, as I'm sure you as well, you know, what's enough, right? So why don't we start with a question of how much dwelling coverage is necessary or appropriate?
So when you look at your homeowner's policy, it's going to come up with a number of different categories. Some might say coverage A, which is basically dwelling, and then they go into the other structures and your liability. But we'll talk about each of those individually. Um, the the first coverage that you really want to pay attention to is something called your dwelling coverage, which is really your coverage A on your insurance policy. This dwelling coverage really offers you protection as a result of damage to your structure or your home, including anything that you have inside the home as far as the fixtures and the plumbing and the heating. And it's due to any type of loss that might include fire or hail or even some wind or water damage. So, as you're reviewing your policy, it's really very important to look at what is mentioned as perils in that particular kind of coverage. Now, when you look at this coverage, this is the most important one because you should be reviewing this on an annual basis. What dwelling coverage is that it's going to cover you in case of a loss. But as you're, especially in the Boulder area, as our homes have increased in value, as the supply chains have changed and some have slowed down, some have sped up. And as we look at that, what the costs are to actually replace a home, this is the number that you really want to pay very close attention to. So as we look at this, in replacing the cost of home, we do use as insurance agent what we call a reconstruction calculator estimator. And so this will have a number of risks and losses and really look at your home, if it's a custom home, if you have built-ins, and come up with a number that is very, very close to where you should have on your dwelling coverage. Say, for example, you have 1,000 square foot home, and it looks a little bit different for condos and homes that are attached. So let's take that detached home. So it is an individual home. And we're looking at anywhere in the market between $250 and $400 a square foot to replace. So that's a pretty big difference when you're looking at what the costs might be. And of course, with the supply chains and with the risks and some of the devastating environments that we have had in the last several years, this is where that coverage becomes really important. And talking to your insurance agent about what is my house valued at.
Awesome. That is fantastic. Now, with that, I know you said it's important to review it every year and that you, as the insurance agent, will provide that estimate, right? But that estimate, with all due respect, is not always the same as true cost of
Mhm.
construction, and every market's going to be different. So, how can someone verify or confirm that it's necessary? Because you certainly don't want to skimp on this coverage, right?
Right. You absolutely do not want to skimp on this. And again, your insurance agent can talk to you about, your customization or what you have in your house. But there is an endorsement that you can add to your coverage. Some companies or some carriers are going to do it a little bit different than others. The best thing to get the endorsement to make sure that you are covered is called a guaranteed replacement cost coverage. And this is basically saying, okay, we're at this estimate right now, and we're estimating this is how much it will cost if something happened to your home, what it would cost to replace it, at the same footprint. A guaranteed replacement cost basically says we understand that supply chains are in flux. We understand that the market changes on a regular basis. We understand the risks that we have in the region. And what they are saying is we will go ahead and work with you to replace your home. Okay, same footprint. So, they won't necessarily let you do it bigger, but, the same footprint at a guaranteed replacement cost. So let's say it's going to cost $100,000, or your dwelling cost is at $100,000, but yet it's going to cost you 150 to replace it if something happened. They would work with you on that guaranteed replacement cost. That is the best endorsement you can get out there. There are also other companies that will offer you a 25% extended dwelling, or a 50% extended dwelling. Those are also common, but you can work with your insurance agent to really focus on what is needed for you at your particular location.
That's fantastic. Now that absolutely makes sense that the guaranteed replacement cost coverage in a catastrophic loss would be so fantastic to have if your dwelling coverage wasn't sufficient, like you said, in a rising cost environment due to supply chain issues or labor issues or anything like that. So wonderful. Now let's talk a little bit about other structures, because I know that the dwelling coverage doesn't necessarily extend beyond the dwelling itself. So things like, auxiliary buildings or sheds or fences, how should we be looking at those items?
Mhm. So other structures, people really have a hard time thinking, they say, oh, well, I just have a small yard, or I don't have any other structures. But that other structures becomes really important because it will include any of the coverages for like detached structures, like a detached garage, or a garden shed, or fixtures that are attached to the land as part of your landscaping, such as a driveway or sidewalks or patios that are not attached to the home. The big one is the fencing. Fencing is very expensive to replace. So if something happened, let's say there was a windstorm caused by wind and hail, your fence went down and it had to be replaced, this is where that kind of coverage would come in and protect you and pay you for those other structures. And again, when we think about other structures, think about anything that might be in your property or on your property that might not be attached to the house.
Gotcha. Perfect. Now I know there's a lot of other categories or coverages within every homeowner's insurance policy. We don't have time to get into all of them, but a couple others maybe you can touch on, whether it's the personal property coverage or liability coverage. Maybe you want to touch on those a little bit.
Absolutely. So, a couple of things here. One, did want to talk about ordinance of law because that is a really that is tied hand in hand with the ordinances that your city or county have put into place. And if something did happen to your home where you would have to replace your home, this ordinance of law, it would cover any ordinances that are put into place that would pay for upgrades to your home. So, for example, an electric charger. A lot of us are buying electric cars, want to make sure that we have that in case we do. Let's say your garage was destroyed by a fire and you had to rebuild the garage, but now the ordinances say you have to have an electric charger. So an ordinance of law would cover that being applied with whatever amount was shown in your insurance policy. Some other coverages, as you were saying, that personal property. Again, a lot of times it will automatically default to a certain percentage of your dwelling, but a lot of us have different properties that are, that we have that, we are near and dear to our heart, but not be that expensive. Others include some estimated coverages of, just the property that we have inside our home. One thing here is that when you have your policy and something on your policy you really want to look for is the replacement cost value, because that will help you. Like, let's say you brought a television at Costco and it cost you $1,000, a year ago, and something happened to that TV and you put a claim into your insurance company and now it costs you 2,000. Having that replacement cost value is something that's really important as you're looking at your insurance, because it will pay to replace that item rather than have it an actual cash value of what that item was. The
Gotcha.
other thing here in the personal property is scheduling a property. Now, again, this is something entirely up to the homeowner, but you can also schedule your property. So if you have high-end jewelry, or if you have furs or guns or golf clubs or whatever you have, that can be scheduled and that is listed out on your policy. So there's certain parameters depending on what your policy says, if there's a loss to that specific piece of jewelry or item that you have scheduled.
That's great. Along with that, it was recommended to me that you should go around your home from time to time and either take pictures or take a video of your personal belongings and have that for your personal records. Is that something you might suggest as well?
Oh, absolutely, Gabe. I'm so glad you mentioned that because a lot of times there are those little things that you might have in your closet or laying around. Again, they may or may not have a lot of meaning, but this is something that you want to really inventory your personal property. It can come in the form of pictures. It can come in the form of a video just by walking around your house and taking a quick video, storing it in a safe place or in the cloud. Because if there is a catastrophic loss, you don't remember every little thing, like how many pairs of jeans that you had, or that you had a record player from your grandfather's old record collection and you had 50 records. This will just give you a way to kind of inventory your personal things in case of a catastrophic loss.
Gotcha. Fantastic. Um, And maybe lastly, the last coverage that I don't think gets talked about much at all is ALE, additional living expenses, right? Or loss of use. Is that right?
Yep. So Several other different categories. Let me just back up and say liability is one that you really want to look at. That's if somebody gets injured or is on your property and gets injured. Looking at that and really talking with your agent of how much that might cost or how much you should have on there. You can have anywhere from a 300,000 to 500 all the way up to a couple million depending on your financial what that looks like financially for you. Your loss of use too, Gabe, is something that's very important because what this looks like if there was a catastrophic loss, or even if you had a small fire in your kitchen and you had to be displaced, this is where the once that claim is made, the carrier would actually place you in a home or an apartment or whatever the case may be. Maybe it was a hotel if it was a couple of nights, and they would actually pay for that as your home was being mitigated for any damages or rebuilt in that case. So that becomes really important. Some insurance carriers will go with a certain percentage of your dwelling coverage. Others will go with something called an ALS, which is the actual loss sustained. So as long as you need to be out of your house while your house is being rebuilt, they would pay for that. So really discuss that piece with your insurance agent.
Gotcha. Well, that's been great. I mean, have we covered all the coverages at this point?
Well, there are so many different intricacies that you can have with your insurance policies. Like for example, your deductibles. As you raise your deductibles, your premiums typically will go lower. As you bundle things together, like maybe a secondary home or maybe your autos or umbrella, your premiums, they give you discounts on that as well. So those are the different pieces that all kind of fit in together. And when you're purchasing your insurance, it's really important to ask those questions to your agent, and your agent can suggest the different coverages to cover your specific risks at the best premiums that they can provide for you. So that's what we're really looking at. And I will say, Gabe, this market in Colorado has been really tough, and a lot of folks have even tried to get that standard insurance, but have defaulted to going to surplus lines, which really, it makes it difficult to find insurance and find insurance that is a reasonable premium. So ask those questions of your agent. You really, what does your policy include and exclude, and how can you save in those premiums by getting the discount or raising your deductibles? So those are just really all very important questions to talk about when you're meeting with your agent.
That's great. And I think I heard you say, as far as deductibles, right? The lower the premium, the higher the deductible, or vice versa. Maybe you could say to have a lower deductible, you will have a higher premium, higher premium meaning a higher annual cost, correct?
Yes. Yes, and so what that is basically doing is the insurance carrier is saying, "We're taking on this risk, and you're taking on this much risk of your particular property. As you increase your risk, we will help you out by making sure we're adjusting that premium lower." So that is the best way that you can lower your premiums, is by raising your deductibles and taking on more of that risk, more of that financial risk.
Gotcha. And lastly, just to reiterate, you talked briefly about surplus lines. I know there's been conversation and articles around insurance companies pulling out of certain markets like Florida and California, and now certain parts of Colorado because of the fire danger. Is that where the surplus lines come into play?
Yes, when you have an insurance that is very difficult to place, maybe it's in high fire danger area. Maybe it's in a high flooding area, according to FEMA. So those might be more difficult areas to place. And when you go to a surplus line, the surplus line are really those lines that are taking on more of that risk. Sometimes they will decline you though if your risk is too great. And unfortunately, people have gone to self-insuring. But if you can find that insurance company or you can find that surplus line, that's when your risks can be covered. But again, it's a contractual thing that you're in with the carrier. So make sure that you go through each of those different points with your agent to ensure you understand what kind of policy and what your coverage might look like.
Awesome. Heidi, this has been fantastic. So much great information here. I guess the last question I would have is, what's one tip that you would, in conclusion, give to people at this point?
Even if you're in the middle of your policy time period and you're having questions with your insurance, call your agent. Ask your agent to review the information with you, because understanding what you're covered for is really going to help you if there's an event or a claim that you might need to make. Agents are there to help you. They're there to answer your questions and to make sure you understand what specifics are being covered.
Awesome. Well, in conclusion here, this has been again fantastic, Heidi. Really appreciate your information and education. If people want to learn more or get more information from you, how should people get in contact with you?
Well, there's two ways that you can contact me. My phone number, just give me a call and I'd be happy to get a quote or answer any questions that you might have. My phone number is 303-912-2411, or you can shoot me an email at HEINEKE@robertsonryan.com. So that's my first initial Heidi, my last name Heineke @robertsonryan.com.
Awesome, Heidi. Thank you so much again. It's been fantastic, and I look forward to having another conversation with you real soon.
Well, thank you, Gabe. I really appreciate it. And thank you to your listeners as well.
Thank you. Talk to you soon.
Okay. Have a good day.